Namaskar dosto, welcome back to Dhwaj Talk Info. Today we are going to discuss one important subject in our episode 18, the 5 hidden red flags most retail investors never find. Every company you own publish their financial year 26 annual report this month. Right now, June 26, every single listed company in India. A document between 100 to 400 pages packed with information about the business, performance, risks, future plans, and yes, hidden problems also. Now, how many of these annual reports have you read? Most retail investors in India have never opened one. They rely quarterly results, summaries, news channels, headlines, WhatsApp tips, and that is exactly the most investors miss the warning signs until it is too late. The annual report is the most information rich document in all of the stock market investings. In the next 15 minutes I show you 5 hidden red flags that live inside it, the section that professional analysts read first and the 99% of the retail investors skip entirely. This episode 18, the primary source behind every number on the skinner.in. Now in the next section we'll discuss what is an annual report and how and where to find it. An annual report is the most comprehensive document of the company publishes each year. It contains complete financial attempts, complete financial statements, balance sheet from episode 12, P&L from episode 13, cash flow from episode 14. It contains management explanation of the business, the assessment of the risk, their plans for the future, and the auditor's independent opinion on whether the accounts are true and fair. And in this notes hundreds of disclosures that most investors never read. How to access it? Go to bscindia.com. Now we'll see how to download an annual report from stock exchange platform. Type bscindia.com on Google browser, then press enter. You will get this screen. Then on the top of the screen there is a query. Here you can select any company you want. For showing you, I am selecting TCS. Click on the TCS. The TCS company details gets opened here. Various details are available. Go down like this. Then you can see the financials here. Click on the financials. Then annual reports appears here. Click on the annual reports. You can get the annual reports of the TCS for the last 10 years. It is available here, and any annual report you can download as per your choice, completely free. Like this, you have to check for the annual reports in the BSC platform. Alternatively, you can check for annual reports in screener.in also. Type screener.in in any Google browser, screener.in, this desktop screen appears here. Now you search for a company here. I will search for Infosys company. Press enter. You will get the Infosys company. Now on the top there is documents. Click on the documents. It will go to the documents section. Here you can see the annual reports for different years. It is available. So there are two places you can find any annual reports, either in stock exchange platform or in the screener.in. Like this, you can check and download any report for free. Thank you. Next, section 3, the 7 sections every investor must know. Every annual report has 7 sections. Section 1, the chairman's letter or the MD's message, most human and the revealing section. Read the tone. Is specific or confident or vague or full of excuses. Section 2, management discussion, analysis, the MDA. Then business environment, segment, performance, forward looking outlook. Then in the section 3, director's report, statutory disclosures required by the law. Then in the section 4, the corporate governance report, promoter shareholding, pledging details, related party transaction, summary, etc. Then in the section 5, the auditor's report, the most important single page in the entire document. Section 6, the financial statements, balance sheet, profit and loss account, cash flow. We already know all these. Then in the section 7, notes to the accounts. 200 to 300 pages of disclosures where the real details hide, where the hidden red flags live, and where most retail investors never look. The 7 sections of the annual report, screenshot this. Chairman's letter contains management views of the year. Tone reveals confidence or stress. Look for vague language and excuses. Void is equal to warning always. Then MDA report contains business outlook, segment performance, forward guidance. What you have to look for is compare with the previous year, tone improving or declining. You have to watch this. Next sector, director report. It contains statutory disclosures, dividend, capex plans, material changes. Look for any mention in the legal proceedings or investigations. Next sector, corporate governance. It contains board composition, promoter holding, pledging related party summary. Look for unusual related party transaction of large size. Then next section, the auditor's report, very important thing, contains independent auditor's opinion on whether the accounts are under true and fair. Look for any qualifications is investigate immediately. Then the next section is financial statements. It contains balance sheet, profit and loss account, cash flow statement, sources of all screener.in data we have already studied. Look for the same checks from episode 12, 13 and 14. Next important thing is notes to accounts. Contains accounting policies, contingencies, liabilities, related parties, 200 to 300 pages. Look for the red flags live here. Most investors skip this entirely. Now here coming up 5 red flags hiding inside these sections. The ones professional analysts look for first, the ones that preceded every major stock crash I have seen in last 30 years of banking. The 5 hidden red flags. Now, genuine gravitas, protective knowledge in 30 years of evaluating companies for commercial banking decisions. These are the 5 red flags I have seen precedes the most serious financial crisis. Not all of them together, even one of them deserves a deep investigation. These are the signals that numbers in screener.in will not show you. They are buried in the annual report and most retail investors never find them. Red flag number 1, qualified auditor's opinion, the most expensive words. Qualified auditor's opinion, the 2 most expensive words you have to look for. The auditor's report is the most important single page in an annual report. The auditor independently examines the financial statements and gives the opinion. Now, here the gold standard is an unqualified opinion. The gold standard is an unqualified opinion. The accounts are true and fair in all material respects. A qualified opinion means auditor has reservation about specific items. The adverse opinion means the accounts are not true and fair. Go to the first page of the financial sections, find independent auditor's report. Read the opinion paragraph. Look for these 2 words, except for or subject to. These 2 words are very important for you. These 2 phrases are the most expensive words in investing. The most retail investors never read. They mean the auditors could not fully verify something important. Investigate immediately when you see them always. Then the red flag number 2, related party transaction that fail the common sense test. Here what you have to look for is every company does business with a related party, subsidiaries, joint ventures, promoter entities. This is normal. Then what is not normal? unusual amounts paid to the promoter entities for services hard to value, consulting fees paid to the promoter's family companies, rent paid to the promoter properties at the above market rates, loans given to the subsidiaries that are never repaid. These transactions are disclosed in the notes to accounts, typically notes 35 to notes 42. The key question: do the terms make common sense? Is the amount proportionate to the service rendered? In 30 years of banking related party transactions that fail the common sense test have preceded some of the most significant corporate governance failures in India. Read them carefully. Ask the common sense questions always. Then the red flag number 3. Contingent liabilities growing quietly of the balance sheet. Here, contingent liabilities are obligations that may or may not be materialized. They do not appear in the balance sheet. They are disclosed in the notes to the accounts. Examples: pending tax disputes, ongoing litigations, guarantees for subsidiaries. A company might show clean debt to equity ratio of 0.3 from short 21, but have 500 crores of contingent liabilities that could become the real if they lose in a court case. Check the contingent liabilities notes every year. Is it growing? Has the new category appeared that was not there last year? Any contingent liability above 20% of the net worth deserves a deep review. Then red flag number 4, accounting policy changes that boost profit without improving the business. This is also very important for us. What you have to look for when a company changes its accounting policies, it must disclose this in the notes to the accounts. Most of the times this legitimate and reflects genuine improvement in reporting, but sometimes a policy change makes the current year look better than it really was. Example: extending depreciation life from 5 years to 10 years. This immediately reduces the dependence expense and boosts the reported profits without the underlying business improving at all. Then check the significant accounting policies note. Compare it with the previous year. Any change in depreciation method, revenue recognition or inventory valuation. Ask why the change was made this year. If the explanation is vague, it is worth investigating deeply. Then the next red flag number 5. Chairman letter language turning vague always. Here what you have to see is this is the most qualitative signal, but in my experience one of the most reliable. Read the chairman's letter from this year's alongside with that of the last year. Great companies have consistently specific data-backed forward-looking letters. The chairman mentions specific sub-projects, completions, exact market shares gains, new product launches and dates and expected revenues. When the language starts becoming generic, we remain committed to the creating shareholders value. We are cautiously optimistic about the future with no specific data. That vagueness is often the first visible sign of the business under stress. Management knows the details first. When they stop sharing details, they are hiding something. Read both years side by side. The change in specificality tells the most important story of the annual report. Now, here coming up 3 green signals that confirm the company can be trusted. Then 15-minute checklist professional analysts use and how to access any annual report free in 30 seconds. Now 3 green signals of a trustworthy annual report. Unique auditor opinion, no exceptions, no qualifications. So the green signal number 1, auditor confirms accounts are true and fair in all material aspects. No reservation, no exceptions, no qualification. This is the cleanest single of the financial integrity available in any investor. When you see in your opinion and to the best of our information followed by the words give true and fair view with no except for, You have passed the most important integrity test in the annual report. Then the green signal number 2, related party transaction at arm's length with a specific justification. Here, the company discloses all related party transactions with a clear pricing rationale. The amounts are proportionate, the services are real and verifiable. Each transaction has a specific description and a business justification. When you read this section and everything passes the common sense test, you are looking at a management team that respects minority shareholders. That respect is one of the most valuable qualities a company can have. Then the green signal number 3, specific data backed chairman's letter with honest discussion of challenges. This is a green signal number 3. The chairman names exactly what went wrong in the year with specific data, not vague acknowledgements, and explains specifically what the company is doing to fix it. Great companies have great leaders who are honest about difficulties. The honesty is the most reliable indicator of long-term trustworthiness I know. From 30 years of banking, I have never seen a dishonest chairman letter followed by a trustworthy company, and have never seen the honest, specific, humble chairman letter followed by a corrupt company. The letter is the person is the company. Then in the next section, the 15 minutes annual report checklist. Here, open bscindia.com live, most actionable section as I have shown before. Here is your 15 minutes annual report reading checklist. Search any company in bscindia.com. Click annual reports, download the latest financial year 26 report. Step 1, go to the auditor's report, read the opinion paragraph. Unqualified, then it is green. Except for or subject to, stop and investigate. Step 2, notes to the account, find related party transaction, read the amount and descriptions. Does anything fail in the common sense test? Step 3, contingent liabilities, note the total amount. Is it above 20% of the net worth? Then step number 4, significant accounting policies, compare with the last year. Any changes? Why? Then step number 5, chairman's letter, is it specific and data backed? Compare with the last year, more specific or less specific. It's okay. These 5 checks take 15 minutes. They reveal what screener in cannot. The human decisions and descriptions behind every number. Screener.in for the quantitative picture, annual reports for the qualitative picture. Both together you are unstoppable. And comment below, which company did you check? What did the auditor's report say? I reply to every comment every day and follow, because episode 9 is coming and it will complete the most powerful investing framework we have built together. Thank you from the bottom of my heart for my Dhwaj Stock Info, you trusted source for investment education in India. Please subscribe, like, share with family, friends, and thanks for watching and supporting me always.